Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Thursday, February the 1st, 2024. Interesting day, needless to say. And the first thing that you're going to notice is that, just as my great commenter and fellow subscriber here mentioned that, am I going to bring out the 4 low and bring down the BC 55 and all that nonsense? Well, there you see it. Well stated, Bob. And don't mind. But let me just back it up and talk about why and what initially and now has taken place since then. First of all, Apple's earnings are not bad. Let me just say they're not bad, but they didn't blow the doors off. Meta blew the doors off. At least the reaction is blowing the doors off. Meta, as I come on to record, stock is trading at 451 after closing at 395, we'll call it. And that's going to give them the 22 cents. So stock is up $56 on earnings. And that has turned a complete turnaround in both the NASDAQ and particularly in the S&P. And Apple's kind of bringing it down a little bit there. But nonetheless, Amazon, good earnings, didn't blow the doors off and managed to, they're going to add more because, hey, well, everybody else is going up. They might go up a little bit more anyway. So originally was hanging out up about, let me just see what it was, up about $6, $7. Now it is going to be up $11 or $12 as they continue to push, just because the whole market now is going to go, or at least the balance of the Mag 7s. Now, what does that do for what I said yesterday? Obviously, folks, obviously, it just tears it down. Now, the reason I put it up is because I felt that the market still had additional downside to do. Well, that by the time I got in this morning and, opened up my computers, I realized, well, we still had that shot. They began it initially early in the session today, but then it ended, and then they just turned into straight buyers all the way through the balance of the day. And that would bring us right up to about here. And then we get the earnings. So it basically turns this mess into a B wave, which also fits, by the way. And the whole move being that wave B went above the top of wave A and wave 3, makes it an expanded flat. And when I go back and I read, what Elliott Wave International is now laying out as new rules, is that they're saying that in an expanded, the B wave needs to take out that high or low, depending on the direction that this would be going or being occurring. And it did. So I guess the expanded is a new way of basically talking about a flat and an irregular. And so I had that always in the back of my mind, but I still didn't like the particular position that it was coming in terms of, like, usually you're going to find it on an A, like this would be a fifth wave and then something larger, and then we get the A and the B and a C. But coming in a fourth wave within an ongoing fifth wave, a minor fifth wave, and then yielding to a minute fifth wave, that's the part where, for me, it doesn't necessarily fit. But they are basically laying it out that it's an A-OK type of deal. So I am going to use it because this is within a sneeze of putting in its new all-time high. And again, we're looking at Meta. We're looking at, Amazon. So we need to now just start taking a look at, well, what do I need to do? Well, I reestablished the count. I reestablished the fibs. And now we can begin to take a look. Minor wave 5, 100% of minor wave 1, 49.92. We're looking here at minute wave 5 being 100% of minute wave 1 at 5,002. So what I thought yesterday, maybe that call wall was not going to get challenged. Well, the challenge is back on, but it still can be stopped. So in other words, it's like the market may not get that far past. So, and what are we going to do about the internals here? Well, this is actually like a 3-wave. And this is like, or we're going to have to figure that out in between and decide what all that is coming down. Now, I'm going to quickly just bring this back down and bring it back over to my other screen to where I can take a look at this in a little bit more. And so it seems a little bit larger. So again, actually it is 1, 2, 3, 4, 5. If we just even blow it up even a little bit more, okay, we can see 1, 2, 3, 4, 5. Then it dropped in a 2. So 1, 2. Inside the third, 1, 2, 3, 4, 5, 3, 4, 5. So we're getting to it pretty dang quick, because we're noticing that it's basically just absolutely running on what we do when earnings, what we do with these earnings, and just whatever's happening within the stock, whatever's happening within the indexes, what it forces and all the different things. But does it change anything that really took place yesterday in terms of the Fed decision, the Fed reasoning, the Fed's message? No. Does it change anything about what we're kind of seeing happen in other areas? No. And so I just find it very interesting. It's like we're going to get that high, and then we'll see what kind of takes place for there. But in the meantime, if you're looking for something for me in terms of, was I wrong in putting that count up? In the outcome as we see it today, yeah, I was. And how it was left yesterday and what I thought was coming up, no, I wasn't. Because I'll tell you, if Meta didn't blow the doors off and Apple comes out like it is, because now, they're even trading the stock, a little bit lower now, then, or what if Amazon didn't blow the doors off? And Amazon didn't, but if Amazon came out lukewarm, I think that the market would be much lower. But again, it's not. So I make my change. And in fact, I believe that as I was speaking yesterday, particularly in the NASDAQ did not break any of its rules for that minute 4. As it turns out here, the S&P did not either. But I felt that with additional decline that it would. And I changed, all of this internal here to actually bring it back to the 4. And again, it's still problematic to me. But one of the things that Elliott did, now this is going back to his original works, he said there are going to be times when the analyst is going to have to really weigh it all out and choose the pattern. And now we are moving to new highs, and there we go. As we speak, S&P moving to new all-time highs. So what do we got? We got 49.92. And being that I don't even have a little wave 4, there's nothing else I can line up to fill in any blanks. So what's up next, folks, is 49.92. And again, it is right now Amazon deciding to catch a stronger bid, and Meta still climbing, and everybody else that'll go along with it. So here we are. Now, going out to the daily, what did it look like on the daily? Pretty powerful. So it just really takes everything back. An A, a B, a C, and here we run. So again, same deal. We're inside the third of this fifth wave, and that's what's really just blasting things higher. It's the third. We'll see. And again, above all this, right? So say we blow through that call wall, and then we get up. We're next up in terms of from minute wave 5 would be 5,086. And we still have these irregular parameters, and those go with the primary B. That's 5116, and then the other is 5307. In between all of those, we have the C wave of B at 5254. We have minor wave 5 at, and this is the one above that 4992. The next one would be 5171. So we have levels that continue to suggest we could just keep peaking and peaking and peaking and peaking. And, everything else be damned, this is what the market's going to do. And that may be the case. Now, so I kind of wanted to say, it's like I said yesterday, I am trying to interpret what the market, when the S&P just dumped yesterday, ended up down 80 plus by the close. And what was that telling us? Versus now at, going up 89. Overnight reversal of the same of what this was. So should we be like, oh yeah, the bears deserve it, whatever? It's like that doesn't make sense. There's nothing to say about that. It's just to say that the market is kind of pretty wild right now, and hopefully still tradable. So given the levels, moving averages are now reversing, right? The 200 have gotten flat. The 50 was declining, folks. It was declining. It's going to have to stop, and it's going to turn. We got the 8, the only one, right? Come on, computer. I don't know why my computer does that, but it does. Here we go. So you see the 8 climbing above the 200 and the 50 resting on the 200, and everything else is turning up. So I believe the 50 will turn and catch up. The 8 will start to rise, and the 20 will catch up behind. But we have everything back in alignment. This is on the hourly chart. On the daily chart, I don't think we had all that. No, they were all still in alignment. The 20 was getting a little bit flat, and then we thought, yeah, maybe we can get down to it. And there is the 8 right there. So that is the S&P. Over in the NASDAQ, Yahoo Mountain Dew. Now, yeah, I took it all back, but remember what I said yesterday? It would be a failure, and it's not, and the size of the failure would have been more uncommon for me. But I thought, okay, if that's what it's going to be, this is what the picture would look like. But it did not break any rules in terms of wave 4 overlapping wave 1. In fact, it had another 200 points. I felt it could come pretty close. It didn't. It didn't even challenge yesterday's closing low. So we have 3, A, B, C, 4, and we're off to the races. Now, let me see. I think I put everybody, all the fibs back up, and let me just make sure. Yep, I've got that up. Yep, I've got that up. And so now I'm going to bring it down to my daily. And where's my wave B? Oh, my A and the B. Oh, it's up here. Sorry. I gotta look for it. That's the C wave. Okay, so now let's bring it back down and let's talk about it. We get an ABC. It is big, but it fits and we're rallying and we're turning and going higher. And remember what I said. I said, if the market turns and starts to move higher, then it has to do it without looking back. Bingo. Yes, we waited all day. Yes, we waited for the earnings, but the market is running and it is not looking back at all. At all. So, what do we get? Let's look at that. Here is minute wave 5 calculations. Let me just, this one actually just barely is holding here, but I'm looking for it to take out that high and then this high. So is this effective? No. Is it because it's 1, 2, 3? No. So let's just automatically kind of take that out. It may give it a pause, which it's doing right now, but I don't think it's going to complete the rally. Now, if it does and this market turns from here and starts to go down with the same speed it went up, well, what we're going to have to see is Meta absolutely get rejected. Amazon get rejected. Apple gets super rejected. And that's just not appearing to happen. So what we got is a rally. Next up, 100% from minute wave 5 is 17,929. That is an additional new all-time high. It does take that high out and it takes out the high of wave 3. So by a fair amount. So that is a logical goal or target for the NASDAQ at this juncture. Now, I will fill in more of that as it becomes available. Now, looking over here, we're on the minor wave 5. If this starts to truly go, it brings us into that area of, for the B wave, the irregular primary B wave, it brings it back into here. And that level is 18,250. Then if this minute wave 5 is still going to go, breaks there, its next level is going to equal to where the minor fifth wave is going to be 1.618 of minor wave 1. The minute wave 5 would be 1.618 of minute wave 1. And that all comes in right there, 18,370, I'm going to call it. So we got like 67 and up to 70. So let's just call it 18,370. And we have additional above all of that. If this wave 5 goes to full bore, then we have the C wave, the intermediate C wave, which would be equal to intermediate wave A at 19,718 and 2.618 for minor 5 at 19,629. And we can come down in here, we have minute wave 5 equaling 2.618% of minute wave 1 at 19,075. The second irregular B wave calculation by Fib is 19,167. So we got plenty of levels if it should surpass this one. So again, being that minor 5, we've already surpassed 100%, it's now going to be down to this structure, the finishing path of that structure. Now, moving averages, let's take a look at those on the daily. The daily produced same kind of bar. Get out of the way, that's quite the bar. And so what do we got going on? The 8 basically was just going flat. The 20 was going flat. Everything else is still kind of rising. So no harm, no foul here on the daily, and that's a very large engulfing green bar, a bullish bar on the daily. I would definitely look for follow through and new highs there. Now, bringing it back down to the hourly chart. Everything looks pretty good. And we're going to, same deal, right? It's got to figure itself out. These will turn, and depending on how strong it wants to get tomorrow or overnight, these will respond and we'll see what they're going to do. We're getting some decent volumes in this last blast, and the market is now closed. And so, and this is where I'm going to leave it. Again, no malintent here. I'm not trying to present a bullish or a bearish suggestion either yesterday or today, just kind of following the market and labeling accordingly. So I've been tracking this for quite a while now. We got a little bit of a twist, more coming in the S&P. It really was in the S&P versus anything else, because I did mark that as the completion point because of that. And then we get that. It's just amazing. And we are new highs after the market closed. All right. Tomorrow is Friday expiration, but we also have some additional, well, we got numbers that are going to come out tomorrow. We have the U.S. employment situation, which is the non-farm payrolls, the unemployment rate, the hourly wages, and the hourly wages year over year. At 10 a.m., those are all at 8:30 a.m. Eastern. 10 a.m. Eastern, we have factory orders and consumer sentiment, the final reading. And that would be for January factory orders or December. And there, pre-market, I'm sure that there are some earnings reports that are going to be coming out. Post-market, there are none. And out of the Mag 7, I think everybody's reported except NVIDIA. And NVIDIA reports in several weeks. They report, I think, February the 21st. So, with that being said, I likely will, because of this activity, and we'll see what happens tomorrow, I likely will make a podcast, an Eye of the Storm podcast, on Saturday to update that big picture, technical picture. Again, I don't think there's going to be a whole lot of changes, but we'll take a look at it and we'll see. And then I'll also see about what's going on over in the bond market. It just continued to put in a pretty strong rally as we see the risk off positions coming on, the recession risk off positions being exited and reestablished in a different manner. And so decent rally over in the bonds. Gold, yeah, continues to rally, which maybe we need to put a little update on that one too. We shall see, time permitting. And so outside of that, the next update will be on Saturday for the podcast. But the Elliott Wave update, if I don't do one on Sunday when Globex restarts, then it would be on Monday. Have a great trading day tomorrow, everybody.